Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is Thursday. This will be the last one for the week, but don't forget to tune back in on Sunday for our portfolio update. Do those every Sunday morning. Today we are going to take a look at Northrop Grumman. This is out of the aerospace defense sector. It is January 25th, and this isn't necessarily a suggestion, but one of the viewers, Mike Wetmore, asked, "Hi Shane, I am trying to add a defense stock to the portfolio in the industrial sector. Can you do a spotlight on which defense industrial stocks you like?" Northrop Grumman is in the defense sector. It did pull back significantly today, so we're going to take a look at it. It's not necessarily one that I like the most in the defense sector or in the industrial sector, in the aerospace defense portion of that, but it is one that pulled back. So we're going to take a look at it, and then I'll speak to some that I like a little better than this one here later in the video. And if you are new to the channel or you'd like to help out or just haven't done so, go ahead and hit that thumbs up down below if you like the videos. Hit the subscribe button if you have not done so already. It really does help out a small YouTube channel like me. Join us on this journey to financial freedom. Join the Vested Interest community and hit that notification bell so you're notified whenever we put out any new content. I really do appreciate that. And for all of you that have already done that, thank you very, very much. This is the Vested Interest stock screener. This is how I set up the videos. It's also how I look at a company on my own on a high level to see if I am interested in investing or back check some of the companies that are already in my portfolio. You should understand the business. You should look for growing free cash flow over the last 5 years, growing dividend over time, dividend payout ratio of 75% or less. Now, this does not apply to REITs or BDCs or companies that are required by law to pay out more of their free cash flow than 75%. REITs, for example, pay out 90%. They're required to by law. Check valuation based on dividend yield theory. Buy below current cost basis or within 15% of 52-week low. So if it is already within my portfolio, I am looking to get it under my cost basis. If it is one I'm adding, I want to buy whenever what I project the company to be worth is within 15% of its 52-week low. So I kind of wait and use that as a gauge for whenever I want to buy into a company as my entry point. Return on invested capital and return on equity, I like 10% or better really, but sometimes I'll look, sometimes if it doesn't meet that 10% criteria, I will look at the industry average. Earnings per share growth, I like 5% or better. And for financial companies like a bank, I use price to book, 1 being fair value, anything under 1 being undervalued, and anything over 1 being overvalued. Must meet 5 of 8. If it's a financial company like a bank, it must meet 6 of 9. So what is Northrop Grumman? They are a aerospace defense contractor. That is what they do, right? And their focus is around air. We build some of the world's most advanced aircraft. Cyber, we are a leading provider of full spectrum cyber across land, air, sea, and space, from preventing cyber attacks to securing military communications. And fun fact, my wife is actually in cybersecurity. That is where her degree is. Land, we provide critical logistics, sustainment, and modernization services for everything from America's emergency service infrastructure to combat vehicles on the battlefield. Sea, we are a world leader in the design, development, and production of naval systems. Space, we've been pioneering in space for over 60 years. And advanced weapons. For decades, Northrop Grumman has protected U.S. forces and our allies by designing, developing, and delivering weapons of increasing complexity and capabilities for expanded missions and domains. So that's really what they do. If you want to know more about this company, check them out at www.northropgrumman.com. That is www.northropgrumman.com. That's a mouthful there. That's a pretty long domain. But you should definitely understand the business, and that's the first step. That's why we start here. Now, the reason we are taking a look at them down 6.33% on the day, we are talking about Northrop Grumman Corporation, ticker NOC, out of the industrial sector, a aerospace defense contractor. Closed out the day at $434.55. 52-week range as low as $414.56, as high as $496. They are creeping back towards their 52-week low and closer to their 52-week low now than they were their 52-week high, especially after this pullback. Average volume of 735,000. Today was 2.2 million. You can clearly see that sell-off in the morning. Looks like they tried to recover midday, but overall down 6.33%. Looks like they are up slightly in the after hours here. Market cap of $65.527 billion. Beta of 0.38. So they are typically less volatile than the overall market. Price to earning ratio, $14.28 per share. Earnings per share is very high, $30.43 per share. Next earnings date was today, so I'm sure something was negative in their earnings. I did not look that up, so you'd want to look into their earnings and see what's going on. And it may not have even been a bad earnings. It may have been negative future outlook or a reduction in their future outlook. You never know. So I would take a look at the earnings report and see what's going on there. For dividend is $7.48. 1.61% yield, a little lower than I like, but again, if you got it closer to this 52-week low, down back in this 414, if it continued to pull back, that would bring that dividend yield up. I would try to get anything above 2%. Ex-dividend date, November 24th. Looks like they paid out on December 13th. And the one-year target, at least according to Yahoo Finance, where I pulled this information from, $509.10. So they see some upside in the stock price over the next calendar year. Now, I like to get into statistics and look at dividend yield theory. It's an easy way to see if a company, gauge quickly if a company is overvalued or undervalued. To do that, you'd click on statistics. You'd go down to their 5-year dividend yield average, 1.58. You compare it to its current, 1.61. Or over here where it says forward annual dividend yield, 1.61, same number. And since it is slightly higher, that means it is undervalued. Really, it's real close to fair value right now, at least according to dividend yield theory. I would want more of a margin of safety on this one, right? That doesn't provide you with much of a margin of safety if this is indeed fair value. Payout ratio is low, 23.68%, so very low payout ratio on this one. Lots of room to increase that dividend yield, pay down debt, make acquisitions, reinvest back into the company. 75+% of the free cash flow is available for all of those things, except for free dividends. The 23.68% is paying the dividends. Now, if you are investing in individual companies, you need to understand the financials. You need to know how to read a balance sheet, know how to look at their income statement. All that information is found under financials. What are their margins doing? Are they growing over time or are they decreasing? Is their revenue growing? Are they paying down debt? What do their assets over liabilities look like? You're going to find all that information under the financials here, and you should be looking at that to really understand what's going on with the company. For our particular purposes, we are going to look at free cash flow. Typically, if a company has growing free cash flow, they have growing dividends over time. So to do that, we'll go in here and look at 2020. You can see $2.8 billion in free cash flow. 2021 actually decreased in free cash flow down to $2.1 billion. 2022 down again to 1.4. And then so far in 2023, they're reporting $2.09 billion in free cash flow. Now, if you do notice here, repurchase of capital stock, they are repurchasing their own shares. And part of that drop, right, in free cash flow from 2020 to 2021, more than covered by their repurchase of capital shares. 3.7 million shares repurchased here. I don't know that 2022 overall accounts for the drop here from 2 billion to 1.4 with only one, so they decreased their repurchase of shares here in 2022. Looks like they've increased it a little bit in 2023 and they're back on track. So a little bit of a blimp here in 2022. Overall, I would say growing free cash flow from 2020 to 2023 here. At least they haven't reported everything in 2023, so you have to wait and see what Q4 gives them, although that may be reported here on this January 25th date. So maybe they did report out their final numbers and this just hasn't been updated yet. But overall, with the repurchase of capital stock, I would say free cash flow is growing over the last 3 years. Now, I always recommend more than one source. StockAnalysis.com is another one that I like beyond Yahoo Finance. You pick any sources that you like. StockAnalysis.com does go back further. Like we saw on the previous page, they only went back a few years for their analysis. StockAnalysis.com does go back quite a bit further, and they have 14 analysts that have taken a look at this. They call it a consensus buy, though it is right on the edge of a buy and hold. And to be honest with you, I would be more in the hold camp on this one. I would look to see how far it's going to pull back. I don't think this one's done pulling back at $435 or $434.55, right? I think there's more pain to come on this one. A lot of these aerospace defense contractors have really run up. Lockheed Martin is another one. General Dynamics and Lockheed Martin would be my preferred ones. I would lean more towards General Dynamics right now. I feel like Lockheed Martin has really run up ahead of itself and needs to pull back a little bit more, but I think they all do. That's Northrop Grumman included. But those three would be my HII. It would be another one that I like. That's the ticker for it, and they build boats. So those are a few in the aerospace defense technology sector or defense companies that I really like in the industrial sector. Mike, if you're interested, I think I responded to you also in the comment that you responded or replied on my channel there. So they have a low estimate of $435. It currently sits lower than their low estimate. So if it came back up, that would be a 0.1% increase in the stock price. They have a average estimate of $499, which would be a 14.85% increase. And if it happened to hit their high of $615, it would be a 41.53% increase. All the while, you could collect that 1% to 1.6% dividend yield. Now, I like to get into the statistics here and see how this company is doing financially, reinvesting back into itself, using its capital to do exactly all the things we mentioned in the previous slide, make acquisitions, reinvest back into the company, all that. That's what we're looking at here. And return on equity, I like 10% or better, sitting at 30.2%. So definitely in line with what I'm looking for there. And return on invested capital, just over the 10% I'm looking for. So these are all pretty good numbers. We get down to earnings per share growth. I like 5% or better. This one is in the negative, 1.11, which is not a deal breaker. Their EPS, if you remember from the first slide, is very, very high. So a little bit of a decline in earnings per share growth is not a deal breaker, though I would prefer this was growing at about 5% per year or more. Revenue growth is forecasted at 5%, so I can deal with the negative EPS. I'm sure it will rebound at some point if the revenue doesn't indeed continue to grow at 5%. Take a look at the dividend real quick. Again, very low payout ratio, 24.58. They are a quarterly payer. They pay out March, June, September, December. Nice dividend growth on this one. So low payout ratio attached to a high dividend growth at 8.58%. Going back to November 2020, $1.45. May 2021, they raised it up to $1.57. Again, May 2022, they raised it up to $1.73. Again in May on 2023, they raised it up to $1.87. So I would expect in May of 2024, they're going to raise it again and stay in line with this dividend growth. Though they could stop that, you never know. Overall, I don't mind the metrics on this one. I just would want more of a pullback on this one towards its 52-week low. See how low it goes. Northrop Grumman isn't, like I said, it's not my preferred aerospace defense contractor. General Dynamics probably number one right now, then Lockheed Martin, very close second, or they might be 1A, 1B there. Northrop Grumman is not a bad one. If you're looking for something in that sector, I would just want more of a pullback on this one right now. Well, Mike, hopefully that answered your question in what I would look for in the industrial sector for a defensive defensive aerospace defense contractor. Northrop Grumman is one of them. Lockheed Martin, General Dynamics, and Huntington Ingalls is another one, ticker HII. Those would be the ones that I'd look for. Boeing does some in the defense sector, though they're mostly in line with the airplanes and stuff like that, but that's another one you could look at. There are some other ones out there, but those ones would be the ones I would suggest taking a look at. You could compare them to each other and see what the metrics look like, what they shake out, and that is exactly how I would look at the four companies side by side. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Hopefully, you're on your own investing journey as well. And hit the notification bell so you're notified whenever we put out any new content. Drop a comment down below. Let me know what you think of the video. What do you think of Northrop Grumman? Do you like any of the other companies in the aerospace sector better? I do personally read and respond to the comments. I'm always interested in reading your questions, opinions, or suggestions for future topics. So much like this suggestion from Mike, even if it's just a sector, I'll pick out a company in that sector and do a video on it, or give me a ticker that you want me to look at and I'll do the same. I've got some other suggestions out there, so I will work them in here. Don't worry, I will get to them. I just have a lot on my plate and other companies that I am going to be looking at. And if we have one that pulls back like AMD this week, or ADM, Archer Daniels Midland, that pulls back like 20%, I'm going to take a look at those before some of the others to see if we can find some value out there. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week. See you on Sunday for the portfolio update video. Don't miss that. And we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount of comfort losing. Always do your own research. Invest based on your situation and circumstances. Select criteria or seek the advice, counsel, certified financial advisor.